You land in a new country. You hear the language. You notice the fashion. You eat the street food. And you might think you're learning the culture. But the real culture is hiding in a place most people never look on purpose, which is the tax system. Because taxes are basically a society's diary written in numbers. And once you know how to read it, you can predict what people fear, what they admire, who they protect, and who they quietly punish. My name is Hector, and I translate complicated systems into simple mental models you can use anywhere. The reason this matters is that almost everyone tries to understand a society by its headlines or its stereotypes, and that approach is expensive because it makes you miss the incentives that shape everyday life, which is where the real story lives. If you understand taxes, you understand incentives. And if you understand incentives, you understand behavior. Because people can argue about values all day while still responding to what gets subsidized, what gets taxed, and what gets ignored. So here's the promise of this video. By the end, you'll be able to look at any country's tax structure and quickly infer what it thinks a good citizen looks like, what it considers a fair life, how it funds its safety net, and whether it quietly prefers wealth, work, family, property, consumption, or compliance. Start with a simple idea that instantly clears the fog. Taxes are not just a way to raise money, because they're a way to steer a population without sounding like you're steering them. When a government taxes something heavily, it's often saying, "We want less of this." And when it subsidizes something or makes it lightly taxed, it's often saying, "We want more of this," while also revealing what groups have political power, because the tax code is basically politics that already won. The first lens is what a society chooses to tax the most, because that tells you what it thinks is the easiest, fairest, or least risky thing to extract money from. If a country leans heavily on income tax, it's telling you that formal work is a central pillar of legitimacy, because the system assumes people earn wages that can be measured, documented, and withheld at the source. That usually goes together with a culture that treats salaried employment as normal, expects strong employer reporting, and tends to build benefits around your identity as a worker, which is why payroll and income taxes often feel like membership dues to the society. If a country leans heavily on consumption taxes, like a broad sales tax or value-added tax, it's telling you something different, because consumption is visible and hard to hide at the point of purchase, which means the state is prioritizing stable collection, even if your income is messy. That tends to show up in places where the government wants reliable revenue from everyone, including tourists and informal earners, and it often creates a cultural habit where prices and receipts matter and where the act of buying is silently tied to the act of funding the state. If a country leans heavily on natural resource taxes, royalties, or state-owned extraction, that's not just economics, because it changes the social contract. When a government can fund itself from oil, minerals, or gas, it doesn't need to bargain with citizens the same way, because it doesn't have to ask you directly for money in exchange for services. In those places, politics often revolves around who controls the resource rents and how they're distributed. And you can sometimes feel it in daily life as a mix of generosity and fragility, because benefits can be high when prices are high, and anxiety spikes when the commodity cycle turns. Now shift to the second lens, which is what a society rewards through deductions, credits, and exemptions, because those are the clues that tell you what kind of life the system is trying to build. If you see big tax benefits for families, marriage, or children, the society is saying that reproduction and household stability are public goals, and it's willing to lose revenue to support them. If you see big benefits for home ownership, the society is saying that owning property is not just a personal achievement, and it's a political project, because homeowners are often more stable, more invested, and more likely to defend the system. If you see big benefits for retirement accounts or pension contributions, the society is telling you it wants you to think long-term and carry part of your own future risk, even if it also provides a public floor. This is where you can stop guessing cultural values and start reading them like a map, because the tax code answers questions people argue about endlessly. Does this society want you to rent forever and stay mobile, or buy a home and plant roots? Does it want you to have kids earlier, later, or not at all? Does it want entrepreneurship, or does it mostly want stable employment? Does it want to encourage charitable giving, or does it fund social programs centrally and treat private charity as optional? The third lens is how a society treats wealth versus work, because this is where the moral story gets spicy. When labor income is taxed heavily, and capital gains are taxed lightly. The society is often signaling that owning assets is the privileged path, and that wealth is meant to be accumulated and protected. That kind of structure tends to widen gaps over time, because wages get clipped every pay period while investments compound, and it can create a culture where everyone talks about getting into assets as soon as possible, because they can feel the invisible advantage built into the rules. When wealth is taxed more aggressively, through higher taxes on capital gains, estates, property, or large fortunes, the society is usually saying that extreme accumulation has social costs, and that the state has a role in redistributing opportunity. That doesn't automatically mean people are less ambitious, because ambition doesn't disappear, but it changes shape, because status may be earned through professional mastery, education, public service, or innovation, rather than pure asset growth. You also tend to see stronger expectations that the state will provide healthcare, education, and social insurance, because the moral logic is that the system collects more from those who can pay, and then it must deliver something visible in return. This is also the moment where you can understand why two countries can feel emotionally different even if the streets look similar. In one place, people might feel like they're climbing a ladder and keeping most of what they earn if they work harder, while in another place people might feel like the ladder is shorter but the floor is higher, which changes how risk feels, how failure feels, and how people judge each other's choices. The fourth lens is compliance, because the ease or difficulty of paying taxes tells you what the society assumes about trust. In a high-trust environment, the system can be simpler, more automated, and more based on reporting, because the state expects people to mostly comply, and people expect the state to mostly use the money as promised. In a lower trust environment, you often see more complexity, more enforcement mechanisms, and more friction taxes, like withholding and indirect taxes, because the state assumes that if you can hide something, you will. At the same time, people in those environments often develop an entire parallel culture of cash payments, side deals, and informal arrangements, and that is not always because they're immoral, but because the system trained them to see taxes as extraction without adequate return. You can feel this in the small stuff. If everyone automatically asks for a receipt and there's a social expectation that businesses issue proper invoices, you're often in a system where enforcement is real and compliance is normalized. If receipts are optional and cash is king, you're often in a system where enforcement is patchy and people treat taxes like a negotiation. Neither is inherently good or bad, but each one produces a different kind of everyday psychology, because the rules you can ignore shape the character you're rewarded for having. The fifth lens is what gets called a sin and what gets called a right, because excise taxes are basically moral judgments that raise revenue while declaring a social stance. High taxes on tobacco, alcohol, sugar, gambling, or carbon-heavy fuels reveal what the society wants to discourage. And they also reveal whether the society believes behavior can be nudged through price. When those taxes exist alongside robust public health policy, the message is often, we're trying to reduce harm and fund the costs. But when those taxes exist without the public support, the message can become, we're monetizing your bad habits, which people feel in their bones even if they can't articulate it. Now here's a move that makes all of this much more powerful, because it stops being abstract and starts becoming a practical tool you can use on any country in a single afternoon. Instead of asking, what is the tax rate? Ask, what is being taxed at the point where it's hardest to avoid? Because that reveals both the government's competence and its assumptions about the economy. Payroll taxes are hard to avoid for employees, so heavy payroll taxes usually mean the society is comfortable funding the state through employment, and it can enforce collection through employers. VAT is hard to avoid because it's embedded in transactions, so heavy VAT usually means the society wants stable revenue and is okay with a system where everyone contributes as they spend. Property taxes are hard to avoid because land can't move, so heavy property taxes often mean local governments are funded through real estate and have a strong interest in property values, which then shapes zoning, housing policy, and the politics of who gets to live where. When you see taxes that are easy to avoid becoming central, like certain self-reported income systems in places with weak enforcement, it tells you something about the gap between the law on paper and the behavior in reality. A society can declare anything in legislation, but the tax base it actually collects from is the tax base it can control. And that's where the honest picture is. Now let's make this concrete with a mental experiment you can run anywhere, including as a traveler, an immigrant, a remote worker, or a founder deciding where to build a company. Imagine two countries, and in the first one, income taxes are relatively high. Payroll contributions fund healthcare and pensions, and there are strong worker protections. While in the second one, income taxes are lower, but healthcare is largely privatized, retirement is more individual, and safety nets are thinner. In the first country, failure often feels less catastrophic, which can make people more willing to start over, retrain, or have children earlier. While in the second country, success can be more financially explosive, but failure is harsher, which can make people more anxious, more insurance-driven, and more cautious about taking risks without a cushion. Now imagine a country where entrepreneurship is strongly encouraged through tax breaks, simple business registration, and favorable treatment for small companies because the tax system wants to turn citizens into micro-enterprises, often because formal employment is limited or because the state wants innovation. That society often celebrates hustle and flexibility, but it also often pushes risk onto individuals because when everyone is a small business, everyone must handle their own volatility, and the tax system becomes a kind of filter that separates those who can manage complexity from those who cannot. Compare that to a country where the tax system is built around large employers, with strong withholding, standardized benefits, and a cultural expectation of long-term employment. That society often has more stability and clearer life scripts, but it can also be slower to reward weird experiments because the system favors predictability, and predictability is the enemy of radical change. This is why taxes are such a powerful cultural X-ray, because they show you not just what people believe, but what the system makes easy. If the tax system makes it easy to be an employee and hard to be a freelancer, you will get a society that looks down on freelancing, not necessarily because freelancing is bad, but because the system treats it as suspicious. If the tax system makes it easy to buy property and gives you benefits for doing it, you will get a society that treats homeownership as adulthood, and then people who rent will feel like they're behind, even if they're financially smart. If the tax system subsidizes children heavily, you will get a society where having kids is treated as normal earlier, and if it does not, you will get a society where people delay or opt out, and then everyone writes think pieces about why, while the incentives keep doing their quiet work. Now we need to talk about the one thing almost nobody connects to taxes, which is national mood, because the emotional tone of a society often matches how taxes are experienced, not just how high they are. A society can have high taxes and still feel optimistic if people believe the money returns as services that work, because then taxes feel like a transaction. A society can have lower taxes and still feel tense if people feel they're on their own for healthcare, education, and security, because then taxes feel like a fee on top of personal responsibility rather than a replacement for it. And then there's fairness, which is the psychological core. People will tolerate higher taxation if they believe the system is fair. And fair usually means some mix of transparency, equal enforcement, and visible benefits. When the wealthy can dodge taxes easily while the middle class cannot, resentment becomes a background hum because people feel like they're playing a game where the rules are for them, not for everyone. When enforcement is consistent and benefits are visible, people can complain and still comply because the social contract feels real rather than theatrical. This is where you can understand political conflict without reading a single manifesto. If you see a tax structure that heavily burdens the middle and lower incomes while leaving wealth lightly touched, you can predict a rise in populism, anger at elites, and a culture of the system is rigged because the numbers teach that lesson every payday. If you see a tax structure that is aggressively redistributive but paired with slow growth or heavy bureaucracy, you can predict backlash from entrepreneurs and high earners who feel punished for creating value. These conflicts aren't just ideological, because they're feedback loops created by incentives, and taxes are one of the strongest incentives a society has. Now let's flip the perspective and use taxes to read what a society fears, because fear is often more visible than love. If a society taxes foreign purchases and protects domestic industries through tariffs, it's often revealing fear of competition, fear of job loss, or a desire for strategic control. If a society taxes capital flight aggressively or restricts movement of money, it's often revealing fear of instability, fear of inflation, or fear of losing control of the economic base. If a society taxes property transactions heavily or makes housing policy politically untouchable, it's often revealing that property values are central to the legitimacy of the middle class, which is a polite way of saying that housing is not just shelter, it's a pillar of social peace. You can also see what a society idealizes by what it makes deductible. If education expenses, training, or professional development are supported, the society is saying it values human capital and wants people to upgrade skills. If charitable giving is strongly incentivized, the society is either encouraging civic participation or outsourcing parts of the social fabric to private action. If research and development is supported, the society is saying it wants to buy its future by paying for uncertainty today, which tells you something about how it thinks progress happens. Now here's the part that makes this practical for your life, because this isn't just a clever way to analyze the world, and it's a way to predict your own experience inside a system. If you move to a place with high consumption taxes, you'll notice everyday spending feels heavier, which changes habits quickly, while income might feel more stable if the state covers essentials. If you move to a place with high payroll taxes and strong benefits, your paycheck might look smaller, but your stress about healthcare or retirement might drop, which is a trade many people underestimate until they live it. If you build a business in a place where taxes are simple and predictable, you'll spend more time building and less time managing compliance anxiety, and that alone can be worth more than a percentage point on a tax rate. If you want a quick method to read a tax system like a native, do this mental walkthrough whenever you encounter a new country. Ask yourself where the government gets most of its money, because that tells you what it can reliably monitor. Ask yourself what life choices are rewarded, because that tells you what the society wants more of. Ask yourself how wealth is treated compared to wages, because that tells you whether the system is built to protect assets or to compress inequality. Ask yourself whether compliance is easy and normalized, because that tells you about trust. Ask yourself what behaviors are taxed as harmful, because that tells you about moral priorities and public health strategy. After that, look at the gap between the official story and the lived story, because in every society, there's what the law says and what the street does. In some places, the law is the street, and that usually means institutions are strong and compliance is expected. In other places, the law is more like a suggestion that creates room for negotiation, and that usually means relationships and informal networks matter more because people solve problems through connections when the system is unreliable. Once you train yourself to see taxes as cultural instructions, you start noticing things that used to feel random. You understand why people in one country obsess over owning a home, and in another they care more about career mobility. You understand why some places celebrate entrepreneurship loudly while quietly punishing it with complexity, and why other places don't romanticize founders but still make it practical to start a business. You understand why certain political debates never die, because they're not debates about numbers. They're debates about what kind of person the society wants to produce. And the weirdest part is that once you can read the tax code as a cultural text, you stop being surprised by outcomes. You stop asking, why do people behave like this? And you start asking, what behavior is being rewarded? Because the society is always answering that question every single day through the price of buying, the reward for earning, the benefit for saving, and the penalty for stepping outside the official path. Which is why if you want to understand a society quickly, you don't start with its slogans. You start with the bill it sends you for being alive in it, because that bill tells the truth even when everything else is just branding.